Good morning. It's Tuesday, November 7th. We have so many great earnings reports that I don't even think we need to focus on the macro review. We'll take a peek there. LTLT's up. That's good. I don't think we need to focus on, economic data. Let's see what's on the calendar. You can see there is some stuff here, but these earnings are so good, bunch of them. We're just going to focus on that. Okay, I've already kind of ordered them up here on my watch list in terms of the top ones: Celsius, Transmedics, Datadog, HIMS, AUGX, GFS not bad, DocCo not bad, but the ones at the top even better. Oh, did Identiv report this morning as well? I got to take a quick look at this. Identiv, or they report tonight maybe. Let's see. They report tonight. Okay, they report tonight. Okay. So, by the way, Geo earnings were not good. Had some common shares, got rid of that for loss. Right now, pre-market, you can see it's 836 by 841. Okay. But, man, as far as these earnings reports, unbelievable. I guess I got to start with Celsius. Okay. Celsius is up 7% here, and I think it has much, much more room to go. You can see the recent 52-week high was 207. Look at this earnings report here. You can see the last one, it gapped up nicely, didn't have a superb day from the open to the close, but in the subsequent few weeks, it went to 52-week highs. I don't know. Who knows? I'll go over the report in just a second and do some math on this. So is it possible we have a day like this, that like gaps and doesn't do much, and then over the next few weeks explodes? Yeah, that's possible. Or it's possible we go straight to the all-time highs at 207 today. Let's dig into the numbers. Okay, how do we do that? We got to go back. No, I got to go to news. Okay. All right. So this quarter's beat was much, much larger than last quarter's beat. Let's scroll down here, look for some headlines. 89 cents beats 46 cents estimate. Let's do the math on that. 89 minus 46 is 43. And then 43, what did I say, 46? Okay, wow. 43 divided by 46. They beat the EPS estimate by 93%. We're obviously not going to go up 93% today. Look at the sales, 385 versus 348. That's huge. Let's just look at that real quick. 385 minus 348 divided by 348. Okay. Revenue up 10%. EPS beats like 90%. Again, these are much bigger beats than last quarter. The other thing I like to do in this case, when I can't get a number that makes sense in terms of the EPS beat, say, oh, stock's not going up 90%. The other thing I like to do is look at the PE at this point. So we'll do that in a second. First of all, there's no guidance yet. Okay, we don't have the guidance for Q4. They're doing a conference call at 10 a.m. I'll be on that conference call. So there's always that risk that something shows up on the conference call. But in this case, I'm really not worried about it at all, because we're not talking about like some mature tech company that may have just had a great quarter, but economic conditions have deteriorated since. First of all, they're in a category that's recession-resistant food. Second of all, their growth is coming from taking market share away from Red Bull and Monster. It's not like a mature tech company that's dependent on the macroeconomic cycles. They're just rapidly taking market share. So whatever they say on guidance at 10 a.m. is really, I think the chances that there's going to be some surprise in there, is negative surprise, is very, very low. So I don't need to wait. I'm not waiting till 10 a.m. I've been buying the stock here in the morning, right at these prices. So 10% beat on revenue, like 90% beat on EPS. So how do we calculate some sort of re-rating? Well, let's look at the math here. 89 cents, if they do that every quarter, and they're going to be growing. As far as I know, this is not a seasonal business. Maybe I'm wrong about that. Maybe there's some seasonality in the summer, people drinking more in the heat. So maybe I'm wrong about the seasonality. But if you probably look at a Celsius revenue and earnings chart, you probably won't even see the seasonality, because they're taking market share so aggressively and they're growing so fast, you're not even going to see that. So I think it's safe to assume that they can, going forward, at least on average over the next 4 quarters, that they could do 89 cents. Out of curiosity, let me just see where the analysts are for next year EPS. All right, I'm going to do their screen. All right. So Celsius, can't see this right now, but okay. So analysts are for this quarter at 46. Okay, they were 89 cents. For next quarter, they're at 40 cents. And for next year, they're at 263. Okay, They're at $2.63. You know what? No, I'm not going to do that. Yeah. So I'm thinking they could do at least 356. Okay. Take this past quarter and annualize it. Okay. So 356. So now let's take the current stock price, 190 divided by 356. You come up with a 53 PE. Okay. Thing is, when you do PE, a better metric is the PEG ratio. It's the PE ratio divided by the growth rate, right? So if you're growing earnings by 20%, that's where that PE of 20 comes from, by the way, because on average, like that's a nice clip that most of the mega caps grow revenue by in a stable economic environment. Is like they grow earnings, or that's at least the goal, by 20% a year. So that's where you get PE of 20. If you're growing your EPS by, what are they growing it by? Like they just grew their EPS by almost 100% quarter over quarter. You got to figure that they can grow their EPS. Even let's see, the analysts are at like 50%. They're like 180 for this year, which they got to ratchet up big time, and then 263 for next year. So they're near 50% growth, right? And that's got to be taken up. So basically, before today's report, right, this was really kind of the fair value around 190. That was before today's report, and they just blew it out of the water. So like in terms of, that's where I look at, that's where I pull up the chart and say, okay, if 190 was where it kind of should have been before this report, and they blew it out of the water by like 50% or more, then it's an easy move to 207, the 52-week high. So that's my thesis on this. My thesis is this is going to 207. It might go there today, and it probably will break 207. Might go there today, and it might take a few weeks like it did last time, okay? And I'll tune in at 10 o'clock. Maybe there's something that's going to be said that will cause that trajectory to change. Either increase the slope of that move to 207 or decrease the slope of that move to 207, or maybe invalidate it. I doubt it, but I'll be listening to a conference call at 10 o'clock. So Celsius, I like very much here, up 6.7%. Again, what's it at? It's at 189 right now is the ask. Okay. That's probably going to be my top pick of the day. We had lots of other good earnings reports here. Transmedics, man, this one, they're not profitable yet. So I'm not playing with this one because it's tough to do. Like I can't do a re-rating on the math, but they crushed their revenue. Okay, they raised their revenue guidance. Shares run out. How much did they raise their revenue guidance? Let's just go back and see how much they crushed it by. Here we go. 66 million beats 49 million. So that's they beat their revenue estimate by over 30%. By over 30% right there. And then I think they guided up for like 20% on revenue. Let's see if it's in here. Okay, here we go. And then for their guide, they went up to 226 and 185. So let's see, 226 minus 185 divided by 185, 22%. Okay, so they beat by 30%. They're raising by 22%, but they're not profitable yet. So I'm kind of loath to do math on this. And you can see the market's just doing it by the revenue at the least, right? It's up 41% pre-market here. So $57, let's just see technically if there's any indicators around $57. It gives us an idea where this can go today. But Transmedics is a great company long-term. I used to own this, and unfortunately I got shaken out when COVID hit. They do organ transplant technology, which saves lives. It allows organs to be transported for a much longer period, cross country, whatever it may be, and that helps saves a lot of lives. So I was in this way back in the day, and I got shaken out when COVID hit. When COVID hit, I got out, and I never, ever got back in. Man, I looked like a genius at first, because the thing was like in the 30s, it went down to 10, and I'm like, yeah, man, I did the right thing selling when COVID hit, and then it was a 10-bagger from 10 to 100. All right, so now we're back here. I think this is a great company to own long-term. I don't know about the re-rating today because it's already up 42%. The revenue beat was 30%, but let's just look at the technical, see what we can find here. $57. And I don't really see anything clear. You see we're between the moving averages. So unfortunately, I have not been playing with this one, but man, this is not a very clear chart to say moving average is $670. Yeah, I guess that's possible. Is that the 200 day? That's the 200 day moving average. It's 69.72. That may be in play. The stock's 57 now. Can you believe it? Anyway, it's a great report, but I'm not going to be playing it for the reasons I mentioned, and I still wouldn't be surprised if it keeps on going. Maybe I'll find a dip opportunity to get this back into my IRA, like I used to have before COVID. We'll see. All right. Datadog, I'm not very familiar with this company, so I don't know that I can speak to it intelligibly. All right. But I can say this earnings report was awesome. Let's go back. Let's go down here and look at the numbers. Okay. And in a way, maybe looks even cheaper than Celsius. Datadog, 45 cents beats by 11 cents. Why do they have to make it difficult? So basically, beats by 11 cents. 34. So, okay. Okay, they beat by 32% on the EPS. Okay, the revenue was a nice beat. Man, I'm losing my voice. Revenue looks like it was, what would that be? 20 on like a 5% beat on revenue, 30% beat on EPS. Let's see if they talk about Q4 anywhere. Forecasts blow past estimates. That's what we want to see. We want to see about the forecast. All right, let's check into this. Revenue came in at 47 for the fourth quarter. Here we go. Datadog anticipates 564 to 568 million revenue versus 545, but I don't really care as much about the revenue. Here we go. EPS 43 versus 35 cents. That's not too big, man. 43 minus 35, 8 divided by 35. Okay, 23%. And the stock is up 25%. So for me, not a big re-rating opportunity, but let's look at the technicals. 99.50. Where's 99.50? Wow, blowing past all the moving averages. Wow, blowing past all the major moving averages. Now, I will tell you, though, that, like I said, this looks like it's even cheaper than Datadog. I'm not sure about their historical growth rate like Celsius, but in terms of annualizing the earnings they just had, let's take a look at that for a second. 45-cent EPS, if you annualize that, that's $1.90. So now you're talking about a PE of about 20, okay? 25. $1.90, close to $2, $100 stock price. Did I get that right? No, 50. Did I get that right? I thought I did this earlier this morning and I came up with a lower number. Hold on a second. Okay, it was... Yeah, 45 cents, 192. Okay, no, I take it back. It doesn't necessarily look that much cheaper than Celsius. So, but in any case, the way I do my re-rating methodologies, I don't see a huge opportunity here as far as the re-rating. As far as the technicals, we're sitting at about $100, which is, let's see where that is here on the chart. Wow, you gotta say this is your resistance, top of this candle, 101.88. Okay. 102. 102 102 is your target and your resistance. If it breaks that, you get the gap fill right there. Pretty easy to see. Gap fill at 104.77. So 102 and then 104.77. Okay. I'm not playing that, but good luck with that. It might work out. It might work out to chase Transmedics. Might work out to chase Datadog, but I'm focused on Celsius for the reasons I told you. Now, other earnings reports. HIMSS. HIMSS, I got in and out. I think I'm out now, but I'm maybe looking to get back in. Let me explain why. When I gave this last night in the chat room, I gave the target of 7+. It got this morning to 690s, and I said, okay, there it is, 690s. And it started pulling back from there, so I started selling at like 685 and maybe all the way down to 660. I wanted to ensure my profit after it nearly hit the target. So HIMSS looks like a great report, but here's the deal. Every single quarter looks like a great report on this stock. And there's plenty of people out there which will tell you HIMSS should be a $10, $15, $20, $25 stock. Okay, why is it so cheap? Why is there such a big short interest? This is a very hard stock to understand. And it reacted very, very poorly to earnings last quarter. Now, I'm going to give you the reasons why last quarter and also what the negatives might be this quarter. But at some point, let me just put it this way. Okay. They beat revenue very nicely. They raised their revenue forecast. Okay. I don't think they beat on EPS. Okay. But they did not raise their long-term revenue and EBITDA forecast. I think of like 1.5 billion revenue and whatever the EBITDA forecast is. They didn't change that. Okay. So from the long-term perspective, maybe nothing changed in terms of the skeptics out there. Now, if they meet their long-term goals, it's very cheap. Like I said, the stock should be $20, $25, but there's skeptics thinking they're not going to get to their long-term. Upset about last quarter. Let me dig into this here. Okay, so do we have the earnings last quarter? Here it is. Okay, you can see this. This was very disappointing, and I have some trauma from this day. You can see it opened up very high, and then it crashed. And it took me a while to figure out why it crashed. The numbers are great. They beat like they do every single quarter. Okay, it crashed after a lot of research and gauging sentiment and talking to people. And the conference call transcript, okay, when analysts were talking about the GPL1, whatever those inhibitors are, I forgot what they're called, that Eli Lilly and Novo has, diabetes injection drugs, right? They were talking about those. And basically, the thesis is that, if you're doing like weight management as part of the growth plans, well, we don't need HIMS, right? Because everyone's using these injections. So the analysts were like pressing HIMS. Are you going to be able to sell those injections through your platform? Do you plan on doing that? And the answer was maybe some point in the future, but not now. And they went into the reasons why. And the stock completely crashed because of that alone. Because of there's so much enthusiasm behind Eli Lilly and Novo Nordisk on their drugs that like anything that doesn't go along with that theme, they're just going to kill it. And that's what happened last quarter. Did they reverse that this quarter? Okay. Not quite. They didn't. But they continue to execute. And they are releasing a weight management program in the next few weeks. It's not going to include that drug. But, if you're just looking at the numbers, they continue to beat and raise, at least on the revenue side, and not on the long-term forecast. So the instinct by a lot of bulls is say, this is a great buy. Let me jump into this. And I think at some point it will be. Now, this quarter, also, I listened to the conference call. Actually, I read the transcript, not to listen. And there was a lot of focus on their marketing expense. Their marketing expense is very, very high. So there are Debbie doubters out there that says either your marketing expense is too high, how come it's not dropping faster? You're not going to be doing these GLP-1 inhibitors, or again, I'm not sure if I got that terminology right, whatever it is, right? So those are the skeptic points, which is why I want to sell this on pops. Yet at the same time, it approached 7, I sold. Yet at the same time, at some point, the numbers will speak for themselves. And even if the marketing expenses are high, even if they're not doing that drug, if they continue growing as fast as they are and they're going to meet their long-term targets, it should become a $20 stock anyway at some point. And I don't know if that's today. I don't know if today is the inflection point because there's just so many quarters, one after another, they keep on raising. Maybe at some point, the shorts give in and say, okay, I may have my doubts, but look, they're executing. So this is a little bit of a trickier thesis on this. So I want to see how it reacts. I want to see how this stock reacts at 9:30 a.m. I'm going to look for technical supports maybe to get back in based on a technical support. I think if you're in this long term, you're good. I actually added some of this to my long-term retirement account last night. But as far as the trading shares, I did sell these when it got near that $7 plus target. But, tricky story on HIMS. So you got to consider all of that when you're making your decisions if you want to be in HIMS or not. AUGX, what can you say? These guys continue executing. But it's a microcap, 528 by 551. I think this is just, I'm not going to chase this. I own some of this in my IRA, but I think on this one, you just find opportunities to buy the dips and you just sit on it, man. The partnership they have with HCA, this is artificial intelligence in the healthcare space. The emergency room product they're building with the network of hospitals is being tested now, and that's ahead of schedule. That goes out for commercial release to all of the hospitals. This stock could become a $20 stock. So nice little report. Wasn't a huge beat, small beat. And again, I think this is a stock on dips. You could just buy it, accumulate, and wait for a couple years and see what happens. Okay. That's the story with AUGX. GFS, they beat on earnings by 10%, both in the current, at least in the guide. I don't know if it was the current quarter. Stocks up 5%. They beat by 10%, but the revenue was lighter than expected I don't like play. Now we've seen this, and I've said this, and I've missed many opportunities on this with the mixed results. It seems the market's reacting only EPS. They don't care about revenue misses. As long as they're cutting costs and they're making money, stocks are moving on that. So maybe this will have a re-rating of 10% today. It's already up 5%, but because the revenue came in light, I'm not going to play this. All right, I'm going to be focused on that Celsius today. But let's just take a look here. It's 54.50 in pre-market, battling the 20 DMA. Maybe you can make a move to that 50 DMA around 55.75. So GFS, you can take a look at that, read the press release, make your own judgment if you're interested in this. But the EPS looked like a nice beat over there on GFS. And I got to go. DocGo also had a nice little report. There's a micro cap. You got to be a little careful with it. It's up 10%. Let's see if we could do some math on this real quick. Don't think I did this. EPS of 5 cents misses by 1 cent, but revenue was a huge beat. 6 beats by 38 million. And I'm not sure if this company offers guidance. You'd have to dig into this. Maybe we can get a, here we go. They do. So EBITDA, here we go. Okay, this is, so we could do the math on this. 2, 5, 2.5, 50, 50. Okay, 52.5, 50, 50. Okay, let's do this. 52.5, 50, 52 divided by 50, 50. That's a 4% beat on EPS. Maybe we'll interview Chris Tuttle on this at some point. This is his stock he likes, up 10%, but I don't see an immediate opportunity there. So honestly, Celsius, Transmedics, DDOG, probably the 3 best earnings reports on the list. Over here, I'm going to be focused on Celsius, but don't be surprised to see Transmedics and Datadog go up all day regardless. You can use those technical levels I gave you as a way to, where to sell or whatnot. And that's it. All right. Good luck, guys. I'll see you guys later. Have a good day.